Guys, if you didn't see those results, they were pretty insane. I just want to see, which I'm pulling up on my site right now, where Goldman Sachs is, which I'm expecting it to be down like it always is when they report great earnings. But then the stock pretty much goes, no, actually it's up to 340, which is great news for our Curzio Research Advisory subscribers who own this at 210, I think, 211. And this is easily going to 400. It should actually go to 500 based on these results. But Daniel, I have the results here, and guys, I could share my screen with you here if you're watching on YouTube here. Again, a lot of you do listen to Wall Street Unplugged, but we do through iTunes and other sources, and even through our website. But, if YouTube, we're videotaping this. We have all the technology. It's really, really cool. So you get to see my ugly face and Daniel's pretty face. But I've shown a Goldman Sachs report, and this is from Evercore, and they actually say, it's titled, "That's Not a Typo."
Yeah. Well, you have to say something silly like that because Q1, I keep reading
so for Q1, I mean, if you thought Coinbase numbers are good, $18.60 earnings. The estimates were for around $9.50-ish.
Yeah.
Which is, so, you're looking at equity investments gains, $3.1 billion, which is, that's trading revenue is up 47%. Investment banking up 73%. Revenues more than doubled. Expenses up, so they're marketing even more. But equities was up 68%. iBanking revenues up 73%. Asset management rose to $4.6 billion versus last year's quarter decline of $96 million. Just across the board. I mean, there's not a thing that you could highlight that you could say, corporate lending declined a little bit. Total loan losses declined 5% year over year, lower corporate loans. But, other than that, this is a sick, crazy quarter, which, again, if Goldman Sachs, Morgan Stanley, I get it. A lot of people hate them. They think they're the evil empire. I get it. I understand. But nobody knows how to make money better than these guys. And the key to these companies making money is two. It's volatility. Right? You look at volatility, and when the markets are volatile, that's when they make the most money, and liquidity. And we have more liquidity in the market than ever, with $10.5 trillion injected, another 2.3 coming probably for infrastructure. I know 10% is for infrastructure, but still, it's going to be injected to people somehow, and of course to the politicians. But these numbers are just, staggering, right?
Yeah, the revenue growth, the investment banking, and of course, the SPACs, they're going frenzy. They're probably going to slow down. What I really took away from this is the CEO, Dave, is it David, or why am I second guessing? I think it's David Solomon. I know it's Solomon. DJ. Anyway, both him and Jamie Dimon from JP Morgan, who also put up amazing numbers. I don't know if you saw those, Frank, but JP Morgan knocked it out of the park as well. Both talked about how great and powerful the economic recovery is, why it's going to continue, and why consumer spending will continue, and they're positive on that. So while they don't expect the SPACs to continue at the rate they are, they still have record backlog. I believe JP Morgan had a record backlog too. And backlog just means business in the pipeline that you're going to cash in on some point in the future, usually between 12 months and the next 12 months. Those are record highs. Goldman Sachs sees client activity extraordinarily high. Everybody's still bullish. What does that mean? That means that if you think in terms of the river analogy, all this money and stimulus being dumped into the river at the top is going to flow through the economy, and it's going to take some time. So this story is nowhere near over. Again, not to be blindly bullish, you're going to have separation. Goldman Sachs, JP Morgan knocked out of the park. Morgan Stanley continues to be the worst bank on Wall Street. I mean, if you're hanging out with your buddies and you say, hey, where do you work? You do not want to say, well, Morgan Stanley right now, because you're going to get made fun of. And, they deserve it. They're being silly. They've got a lot of issues too. Goldman knows how to be the biggest crooks. I don't mean crook as financially crooked or jail crooked. I just mean playing the game better than anybody else. So the takeaway there is both of the biggest, most successful banks in what they do, the CEOs think the economy is going to continue hotter, and that means that we have a lot more opportunity in the bull market as investors.
Yeah, and one quick note here, because, breaking down the financials, and I never use return on equity as a measure to buy a stock in my life. I mean, it's just something that you see that's a good metric, but, that's for me, I've never bought or sold a stock based on this.
This isn't a typo either, what you're about to say, because this is hilarious.
Return on equity for the quarter was 31%. For 2020, it was 11%. It's just the numbers that listen, if you want things done, you're going to pay a high price, you're going to pay high fees, but you get it done, right? Because they're the best. They know how to make money and they service their clients.